Money with Mari. I'm your mentor, Mari, and this is Forex 101. In this lesson, we'll be discussing a widely favored technical indicator used to measure market volatility and identify overbought or oversold conditions within the market. Let's talk about Bollinger Bands. Bollinger Bands are popularly used by traders in many markets. They are volatility bands placed above and below a moving average. The bands automatically widen when volatility increases and contract when volatility decreases. Bollinger Bands can also be used to identify overbought and oversold levels, trends, and breakouts. Let's move over to a live chart to see how we can use this indicator strategy to trade within the market.
So I am super excited to be introducing to you guys this amazing indicator called the Bollinger Bands. Now, the reason why I love this indicator so much, you guys, and it holds a special place in my heart, is because this is actually the very first trading strategy that I was able to use and apply to the charts as a beginner trader. And it was actually able to improve my ability to make profits for myself tremendously. So I am super excited to show you guys this indicator. And one of the best things about this indicator is that it can be used along with other indicators, or it can just be used as a standalone strategy. That is why this easily became one of my favorite indicators as a beginner trader. And you guys, the program that I was in that taught me how to trade, they didn't really go in super detail on this indicator. So I had to actually go out and do more research on this indicator. And by me conducting my own research, that's how I was able to actually create my own trading strategy using this. And you guys, this literally changed the entire game for me. So let's just go ahead and hop into it. I don't want to hype it up too much. You guys will be able to use it yourself and create your own opinions. But for now, I just want to go ahead and show you guys how to actually add this indicator to your chart. So let's start by scrolling up here to indicators. As you guys can see, we are on USD/JPY, the daily time frame. We're going to go over here to indicators and type in Bollinger Bands. All right, and as you guys can see, I do have a star right here next to Bollinger Bands because this is, as stated before, one of my favorite indicators, especially as a beginner trader. So I'm going to go ahead and tap this once, and we're going to go ahead and see it appear here on our screen. Now, I do want to change just a few color settings on this indicator. I'm not really going to change any of the inputs. So I'm going to scroll up here to Bollinger Bands, go over to settings. If we go over to our inputs, you guys will see that we have our length set for 20. This is going to be the length of our middle band, which is just a simple moving average of 20. And then we're going to have our standard deviation of 2. So our upper band and our lower band are going to be 2 standard deviations away from our middle band. Now let's come back to the style. And all I want to do is I'm going to change our basis, which is our middle band, to white. I'm going to thicken it. The upper band, I'm going to change it to red and thicken it. And our lower band, I'm going to change to green and thicken it. Let's go ahead and press OK. So first, let me talk about these bands, all right? So I want to point out, again, this is our upper band, which is going to represent our overbought zone. Then we have our middle band, which is like our home base. And then we have our green band, which represents like our oversold zone. Now, I want you guys to understand that the wider the bands are, the stronger the trend will be. And let me just show you guys. Let's go to the past. So we can see here, you guys, when price didn't have a lot of momentum, the bands were really close together. Let's go back some more. And here's another example. The market didn't have a lot of momentum. The bands were close together. But as you can see, as price started to gain momentum, what happened to the bands? The bands began to break apart, right? They started to push apart. And the farther apart that the bands are, the stronger the trend is. If price is in a strong buy, you're going to start to notice the candles ride the top band. And vice versa, if price is in a strong downtrend, you're going to start to notice the candles ride the lower band. Let's see if I can find a better example of riding the lower band. See, here we go. Another strong uptrend riding the upper band. Look, you guys, look at all this consolidation. Look at how tight the Bollinger Bands got. Look how close together they got, you guys. This was literally no momentum in the market. You should have known immediately that you were looking for this breakout. But I'm trying to find an example of a sell. Let's see, when price is riding the lower band. But it looks like this market was really uptrending. Okay, here we go. This is the perfect example to show you guys that when price is in a strong sell trend, you will see the candles riding the lower band. So with that being said, the closer the candles are to the outer bands, the more momentum you can assume the market has. Now, as price starts to move away from the outer bands, it's actually going to start to show us fading momentum within the market. Now, repeated retests or pushes to the band without price actually touching the band shows weak momentum in the market as well, or weak power in that direction. For example, you guys can see we were in a strong uptrend. So every time price came down to try to retest our lower band, it couldn't even make it down to our lower band. The furthest it could make it was to our middle band, which showed us that sellers literally had no momentum and that buyers were really pushing this market up. Traders love using this indicator because you can easily identify if the market is trending up or down just by studying the geometry of the bands. Not only that, but using the Bollinger Bands can also help us identify market patterns a little clearer. You know, things like double tops, double bottoms, head and shoulders, stuff like that. You'll be able to see them a lot clearer using the Bollinger Bands. So now that I kind of broke down how the bands work, I want to show you guys a few simple trading strategies that you can use. So one trading strategy that you can use would be to trade the band to the midline. Now, this is a more conservative way of trading. If you're a little more concerned about losing any money, this might be the way you want to start trading this indicator. And then when you get more comfortable, you can start to trade upper band to lower band and actually make more profits. So let's go ahead and talk about this band to midline strategy. So the first thing you want to look for when you're going to trade the band to midline strategy is you need price to actually touch the upper band or the lower band. So you will want to wait for price to literally come up and break out of one of these bands. And then once you see that, you will wait for a confirmation that price is turning around. You would place your trade for this sell, and then you would place your take profit here at the midline. So you will be waiting for price to come, break out of the upper or lower band. As you can see here, price literally pushed outside of this band multiple times. Now, if you want to be a more aggressive trader, then you could actually trade from band to band. And this concept is pretty much the same. You want to wait for price to push up and out of one of these bands, the upper band or the lower band. And then from that point, you want to actually wait for a confirmation that price is turning in the opposite direction. Now, in this case, instead of setting your take profit at the middle band, you will actually set it at the opposite band, which means you will be able to make more money on this trade. So these are two common ways to trade the Bollinger Bands, but these are more like reversal strategies. These positions will allow you to make profit on pullbacks and reversals in the market. However, there are a couple more strategies I want to show you in regards to these Bollinger Bands. Because this indicator offers these types of reversal strategies, typically this would be kind of a trading against the trend type of strategy, but there is also a way to use this indicator to trade with the trend. And that's actually going to be called the pullback to midline strategy. So let me show you what I mean. So as you guys can see, we have this strong uptrend going on in the market. For the pullback to midline strategy, you will want to first start with completing your top-down analysis, right? Checking your daily time frame, checking your 4-hour, your 1 hour, just depending on what time frame you like to trade on. But the whole point of this is that you want to determine the overall trend of the market. Now, if the market is in an uptrend, then you want to enter a trade when price actually pulls back to the midline. Then you would use the upper band as your take profit. Now, if the market was in a strong downtrend, it would be the same thing. You would enter when price pulled back to the midline, but then you would use the lower band as the take profit. So here is a buy example, you guys, of how we could have traded the pullback to midline strategy. As you guys can see, we have this strong uptrend going, right? Now, when we have price come down and pull back to our midline, we notice that price starts to lose momentum and it's actually unable to break past our midline. So that is actually a confirmation for us that the market is going to continue up. So all we would want to do is wait for price to pull back to the midline, then give us a confirmation that price is going to continue up like this flat bottom candle. Get in and take it up to the upper band. Then you guys, it happened again. We had price pull back to the midline. It lost momentum. It could not break through. Then we got another confirmation that price is going to continue up, right? And then we set our take profit at the upper band. And it would just be the opposite for a sell, you guys. We would be looking for price to come up to the middle band, right? Lose momentum, be unable to break through, and then continue in the down direction. Once we get that confirmation, like a flat top candle, that price is moving in the downward direction, that's when we would enter the trade and set our take profit at our lower band. So that's really as simple as it gets. It's pretty much the same thing as like taking positions on pullbacks when price hits the trend line. You know what I'm saying? You can essentially look at these as trend lines or moving support and resistance as well. So if price cannot break through a trend line, typically we know that it's going to continue going in the direction it was originally going. And it's going to be the same thing with these Bollinger Bands. So those are pretty simple concepts to understand. There's just one more way I want to show you guys that you can actually trade the Bollinger Bands, and that's just going to be to look for breakouts. So you guys, this is actually a perfect example of how to trade breakouts using the Bollinger Bands. So as you guys can see, we have our Bollinger Bands super tight together, right? Ranging, consolidating between our upper band and our lower band, but our bands are just so close together, the market literally has no breathing room. So let's mark this up. We have the market consolidating here. So essentially, you guys, we would have just been waiting for the market to break out of this range before we got into this trade going up. Let's zoom in. As you guys can see, the bands were super tight together, but as price started to pick up momentum, our bands began to split apart. So as soon as you got that confirmation that price was going to be moving in the upward direction, right, like one of these flat bottom candles, you also would have just been looking for our Bollinger Bands to start to spread apart, right? That's just letting us know that there's more momentum entering into the market. So you would have waited for price to break outside of this area, and then you would have gotten in and set your take profit at the upper band, wherever the upper band may have been at that time. So yeah, those are 3 different ways that you guys can actually make money using the Bollinger Band strategy. Now, I do have a few tips for you guys when using this strategy. Number 1, if you see price riding the lower band, it is likely that price is going to break out in the upwards direction. So these are great points, you guys, to be looking for reversals. Whenever you see price is strongly pushing against one band, you know that it's going to turn around. So as I stated before, you guys, the upper band, you can think of it as overbought, and the lower band, you can think of it as oversold. So if you see price riding our overbought area, you know that it's going to have to sell soon, right? And vice versa, if you see it riding our lower band, we know that it's going to have to buy soon. So that plays more into the reversal trading strategy for the Bollinger Bands. Now, you guys, even though this does commonly happen in the market, it's not always the case. So you want to make sure that you always conduct an overall chart analysis and wait for additional confirmations before hopping into a trade. Now, something that you guys want to note is that this indicator can also be used in conjunction with other overbought, oversold indicators like the stochastic oscillator and the RSI. And when you use this along with one of those confirmations, you will be able to find even more accurate positions to enter the market. Another tip I want to give you guys is to make sure you wait for price to close above or below the midline to confirm if price is actually moving in that direction. So if you think the market is going to buy, you want to wait and make sure you get a candle to close above the midline to confirm that price is actually buying. And vice versa, if you think the market is going to sell, you want to wait for a candle to close below the midline to confirm that price is actually moving down. Now, when you're in on a trade and it's a strong trend, you can actually continue to ride the price or surf the band, as they say, right? You see price just surfing the band. So when you got into this trade, as long as price was surfing the band, I would have stayed in. Now, when I started to see price push away from the band, that would have been an indication that, okay, now this is starting to lose momentum, which as you guys can see, it was, and then it turned around and went in the opposite direction. So you can definitely surf the band, you guys, and wait for confirmation that momentum is starting to die out. Now, last but not least, again, you guys, I just want to remind you that strong trends will have a large gap in between the upper and lower band and the midline. Weak trends will have the bands close together, all right? So yeah, you guys, that wraps up this training for Bollinger Bands. I hope you found this useful and helpful to your personal trading strategy. If you have any questions, you guys know where to reach me. But until then, I'll see you guys in the next class.
That concludes this lesson. If you have any questions or remarks, please join my discussion board and make them known. Feel free to follow me on social media and leave this emoji under a recent post for a follow back. Thanks again for tuning in to Money with Mari, and I'll see you on the next episode of Forex 101.